What if I told you Wall Street's gold forecasts are fundamentally flawed and the real target could be $3,700 by 2026? Investment firm Bernstein just dropped a bombshell analysis that challenges everything we thought we knew about gold pricing. Whilst Wall Street consensus sits at $3,073 per ounce, Bernstein's models suggest we're looking at $3,700 by 2026. Here's the problem. Most analysts are still using outdated supply and demand models treating gold like oil or copper, but gold isn't consumed like other commodities. Only 1.5% of all gold in circulation was actually mined in 2024. The rest just sits there accumulating. Physical scarcity simply doesn't drive gold prices. So what does? Bernstein identified 6 factors that actually work: Federal Reserve rate cuts, interest rate cycles, inflation expectations, dollar weakness, futures markets, and central bank buying. Notice something? They're all about monetary policy, not mining output. This is crucial because gold behaves more like money than a commodity. It's driven by confidence, not consumption. Here's a common myth that gold prices always revert to a long-term average, just like oil or copper. But that's not true for gold. Gold doesn't behave like an industrial commodity. It acts more like money, a store of value that responds to confidence, policy, and risk, not to cyclical supply and demand shocks. When central banks buy gold to reduce dollar dependence, when inflation fears rise, when real interest rates fall, that's when gold moves. For investors, this means rethinking gold entirely. It's not just a shiny metal, it's a monetary asset and a hedge against systemic risk. So, what does this mean for investors? Gold mining stocks can offer even more upside when gold rises. Bernstein rates Barrick Gold as outperform with a potential 78% upside. Newmont Corp is still a strong play, but with some caution after their CFO's sudden exit. With geopolitical tensions rising and central banks diversifying away from dollars, we might be entering a structural bull market. The takeaway? Stop thinking like a commodity trader and start thinking like a central banker. Quick facts. Bernstein's 2026 gold forecast is $3,700 per ounce. Wall Street's consensus just $3,073. Only 1.5% of all gold in circulation was mined in 2024. The real driver? Policy, not supply and demand. Want more gold and market insights? Visit dhandathegreat.com for the latest analysis and strategies. Remember, gold isn't just a commodity, it's a policy-sensitive asset for a changing world.